We're at the end of a holiday trading week where Monday really set the tone for markets. Yes, we were down slightly, but compared to the 2 weeks prior, there's relative calm out there. We got a bit of a pullback with those Nvidia China ban news, and then saw a more meaningful decline on Wednesday as Jerome Powell had a hawkish tone in an interview. Normally, these intermittent outings don't move the market quite as much as the main FOMC interest rate decision and press conference, but all eyes are on the Fed right now to look for any signs of hope of interest rate cuts coming in to soften the blow from tariffs. Now, while we want to see interest rates falling, the only thing really on the decline this week was consumer sentiment and the VIX, the latter being a good sign for markets. On the flip side, business bankruptcies are spiking, and this is all while Trump now seems to be going to war with Jerome Powell and China, and the ECB is over here in the background cutting rates on Thursday, and seemingly no one wanted to talk about that. If you're in crypto, your portfolio is holding up better than pure equities. Bitcoin has good chart setups and is showing relative strength, despite JP Morgan saying that it's failed as an inflation hedge. But we all know that when they come out and say this or say that Bitcoin is dead, it's usually the sign of the bottom. Add to that Solana has been outperforming for the first time in several weeks, and that's most likely due to the incoming ETF launches. News aside, to the person who called me One Punch Man in the comments, well played. With the holiday today and markets closed, I've got something fun and different planned for you. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all are having a good Friday. Today, we're spending less time in charts, and I'm going to focus on demonstrating how I perp trade Solana to both grow my bag and to generate cash flow. Now, before we dive in, if you do find value in the content, if you could like or subscribe, that would mean the world to me. Also, if you have questions, leave them in the comments below. On a video like this that's very technical and nuanced, I'm sure those will arise, and I will check back on all the comments to make sure I answer those. And if it's something that requires more explanation, I'll record a follow-up video to this down the line. Also, earlier this week, I released a video that goes over how I set up a TradingView chart from scratch and the exact indicators and settings I use for 95% of my short-term and long-term trading. If you are interested in checking that out, I've put a link in the description down below. Now, the only general thing to be aware of going into this holiday weekend is that Mondays after Easter tend to historically be red. I'm not saying that's a guarantee, but we've seen low volume and low volatility this week. So with the uncertain backdrop that persists, don't be surprised if the roller coaster ride picks back up. That aside, I'm really excited to introduce a new segment to the show that we're calling Dumb Chart of the Week.
Dumb Chart of the Week.
Will you look at this dumb chart? Just look at it. It was up over 100% this week in an otherwise beaten up and quiet market. So what company is this? Perhaps they developed an Alzheimer's cure. Perhaps a breakthrough in autonomous robotics. Or are they revolutionizing banking? No. This is Hertz. Yes, that Hertz, the company that makes money renting out four-wheeled liabilities. So what materially changed in their business to have their stock double in under a week? Actually, 3 days to be precise. Well, as of the time of this recording, nothing. That's right, nothing has changed. All this hype is on the back of an investment disclosure from Perishing Square Capital Management, noting a 12.7 million share investment valued at about $46.5 million, or a 20% stake in Hertz. Now, if you're not familiar, Perishing Square is led by Bill Ackman, whose legendary feuds and rants on X are honestly way more interesting than his stock picks. I'm sure, or I'll say I hope, Bill knows something that we don't know about Hertz. Because if you zoom out, this chart has been in such a nosedive that you would think it was manufactured by Boeing. Too much? Anyway, someone knew something because an options trader made a 20x going long a couple of days ago and then quietly exited before the weekend. Must be nice.
Dumb Chart of the Week.
Well, that was fun. Webull was a very close contender for Dumb Chart of the Week, but you can just go look at that for yourself to see how it spiked to $80 only to end the week at $25. Let's move on. Now, not much has changed in the charts, but I'm just going to do a quick rapid fire round of a few key names. Okay, looking at the SPX, not too much has changed. We are still under this downtrending resistance that I marked in yellow. We have a small gap fill here from our 2 days down on Wednesday and Thursday at 53.88. And then this major gap fill that I'm still scouting from our initial tariff drop, which is at 55.74. So I'm keeping my eyes on those. But we are just kind of finding an equilibrium right now and seeing if news can get us back up here. My base case, just looking at the last 5 drops over the last 7 years, outside of COVID, all of the extreme drops we've seen have had kind of a rally up and then one more lower low before really bouncing in a meaningful way. So this is a scenario that I'm definitely keeping in the back of my mind, and I still have cash ready to go, and I'm looking at a few key names that we've covered in these charts to enter in here. If we switch over to the NASDAQ, very similar looking chart. We've got this downtrending resistance right here on the NASDAQ. I'll also make that yellow for everyone so we can see that. But again, finding equilibrium in this key range. Moving over to gold briefly here on the weekly, gold continues to skyrocket. We are getting really close to that $3,600 target. And if we zoom out to the monthly, just as a reminder for all of us that historically, these kinds of moves that we've seen over the last 2 years are not normal for gold. It is definitely a flight to safety right now, but a spike like that, just as we saw in this spike right here, is not sustainable. So I suspect we might hit that 3,600, but the most common thing here and with a lot of stocks that have these spikes is that they find an equilibrium and a progressively tightening range until they decide what their next move is going to be. So going over to Bitcoin, the thesis could be that as gold exhausts, those money flows start moving into Bitcoin instead. Bitcoin has just been in this very tight trading range, and generally ranges that are compressing like this mean that a bigger move is coming and we're going to have a decision of if we're moving downward or upward. This double bottom still has us targeting that 87.3 range right here where I have this dotted line. So that could certainly be possible. But if the broader market has another pullback on negative news, I think it would be hard for Bitcoin and crypto to not get sucked up in that negative sentiment and have another leg down. The question is, how far down? And do we set a higher low? And then I'm still tracking this early March timeframe for global M2 to kick in. And if you're not familiar with this chart, we can just see how Bitcoin and M2 track each other with that 108-day offset. So this, what we're seeing here, this is the global M2 supply over the last couple of weeks that has just been spiking. It's not that we can see into the future. This is just offset by 108 days. And generally that's how long it takes money to flow into stocks and crypto. So on this M2 chart, you'll notice we have this little dip right here that could be incoming next week. Maybe we back test this resistance line that we broke out of. That could certainly be possible. And then if history repeats, we should be off to the races. But again, we are in uncertain times, so we need to keep our mind open to both scenarios. Okay, that's it on the main charts. I'm just going to bring up a couple of honorable mentions that we haven't looked at, but are definitely worth keeping your eye on. The first is Taiwan Semiconductor, which is now manufacturing in several locations in the US and is a little bit safer than some of the other semiconductor plays. They just had earnings this week, and if we zoom in, you can see they were actually down a little bit on earnings. I bought a small position, but I have more buy orders placed here at the 148.30 line and then the 141.60 line to build a bag. You can see if we go back historically, we've got a decent chunk of support and volume right in that range. I'm scaling in, building a position, hoping we dip back down, but this is oversold on the daily and weekly, and I think the fundamentals are strong. Aside from that, I've got these other levels marked out at 125.73 and 119.43. The lowest I would see this going is way down here to these previous peaks in this big volume zone at 107, but that would still be a good pullback from here. Something would really have to materially change in my mind for things to go back to there. So again, bottom is not confirmed, but I'm starting to build a position on this one. The other one, which is an honorable mention, which is in a sector I don't normally like to play in, is Novo Nordisk, the makers of Ozempic and other drugs. They've had competitors come into the space, taking market share. They also had some new drugs that didn't offer quite the results that the market was hoping for. So you can see how since September, they've just been in this huge decline, but we are really getting into this most traded zone here between about 58, let's call it $59 to $52. We are hovering right at the top of that, and this volume cluster alert that I had set at $57 this week entered me into a very small position. This is not something I want to hold for a long time, but we are into this consolidation support here, which ran for over a year, 400 59 days, and this huge volume cluster, so that should provide support for a bounce. Again, this is a shorter term play for me. I don't necessarily believe in the company, and I don't think it's going to go back to all-time highs with all the hype it had on the back of Ozempic and the competitors in the space, but we could expect a bounce like this, and then I wouldn't be surprised to see a year plus of a tightening range as we find equilibrium, and then it has its next break, and maybe that's on news of some new wonder drug. But really, I'm just looking for capitalizing on this move right here. Okay, last one, which we have been covering the last few weeks, is Tesla. And you can see how we just talked about finding equilibrium on the Novo Nordisk chart. Tesla is kind of doing the same thing on a smaller time frame here, just tightening up into investor day and earnings on the 2nd. So we're at a key range here at that 240 to 250. That 220 down below is also providing a lot of support. And earnings this week is really going to play a pivotal role in deciding if we break above that 310 to 315 range, or if we go down and we potentially break through those 200 lows. Just giving you a little sign of hope, if we go back to the COVID lows and draw this line through the other two lows we've seen over the last couple of years, I don't think we would drop beyond this range, which right now is sitting at 170. That would be a very strong support if Investor Day does not go favorably for Tesla.
Hey guys, sorry for the interruption. So I unfortunately had an error with how I set the screen recording for the demo. I've been trying to fix it in Premiere for about 4 hours, and I'm just seeing that some key tools and details are getting cut off that are really important to this. I want to make it right, and I'm sorry to leave you guys hanging, but I'm going to re-record the perp trading demo tomorrow, and I'll release a separate video just for that. Appreciate your understanding and patience, and I hope you guys all have a wonderful start to the weekend. Bye.
This isn't financial advice. Past results are not indicative of future performance. Do your own research.